Namaste, good morning. Welcome to this first session of amendment applicable for 2021 examinations. I would like to tell you that this is the amendment for the forthcoming examination as well as November examination. So if at all there is any notification, especially for November examination, what I will do is when I am doing the revision sessions for November, I will cover that. Basically, I want to give you a small introduction. That is, these are amendments of Finance Act 2020 and the subsequent finance bills and amendment bills that came into effect. These are applicable. Why I am stressing is that many of you had texted me asking, is this applicable for November also? Yes, it is applicable for November also. This is the same lectures for amendment. But with regard to revision classes, that's why I am taking this time amendment separately, revision separately. With regard to revision classes, I will handle separately for November examination during the month of say October first week or September last week, and for our examination which they have proposed in July, not yet sure. Once it gets confirmed, I will give you the dates of revision. The revision will be separate for this examination and November examination, whereas the amendment lectures will be the same. The amendment lectures which I am recording are open lectures that will be available to you and to your friends. I will give you the IDs, etc. Friends, these amendments that are proposed in the Finance Act 20, okay, have a little larger impact. So, from our perspective, from the perspective of a student who is ahead of, who is facing the examination ahead, okay, be it the forthcoming examination whenever it is conducted and be it the November examination, there is a possibility of at least 20 marks coming from amendments alone. At least 20 marks coming from amendments alone. Both the examination, I'm not saying that even if they cover 50% of the amendments during the forthcoming examination, another 50% is still there, okay, for the November examination to cover. So, in that way also these lectures might be of little help to you, so that's why I am having it separately. And the second reason is the number of amendments in international taxation is very less, handful only. The number of amendments in international taxation is handful, very lesser number of amendments. So that 30 marks goes unaffected. Okay. That 30 marks amendment, if you look at it, equalization levy, one or two exemptions, all put together 5 marks maximum they can. All other things are regular features only, like transfer pricing and all. There are not much amendments, just administrative amendments only. So what happens is amendments plus international taxation makes you clear the examination. Amendments plus international taxation will make you clear the examination comfortably. And of course, there are other features. So just to tell you how important these amendments will be, and just to tell you also that do not fear. As usual, the most easiest of the subject which I continue to tell is taxation. This amendment material which I have posted in the group, which will be there in a particular drive also. The drive link will be given and all the classroom workings will be there in the drive. Okay. This amendment material might undergo small changes. I'm just suddenly I get an idea that probably I can do this particular question, etc. So at that time, I include that question at the, okay, so there might be small changes. That's why I am very specific not to print it as of now. Do not print it as of now. Okay, after the sessions are over, if you intend to print it and keep, you can keep. Wherever I'm going to make some markings, make some highlighting, etc. in the amendment material. So in the drive which I am going to provide you, I will also provide the material which I have highlighted in the classroom. So there will be a clean material. There will be a material which I have made some highlights, etc. Those things will also be available to you in the for your preparation and other things. Okay, and one ground rule or couple of ground rules is, since I am screen sharing and I am recording in a different software, okay, kindly don't chat in the chat box available in the Zoom. Okay, that chat box will not reach me because I have screen shared on one side, and on the second side I am recording it on some other platform. So if at all there are any queries, okay, please text me in between during the classes whenever I look into the queries. Okay, in between during the classes whenever I look into the queries, I will clarify those queries. But as of now, I'm not looking at it. I'm just progressing. But if at all you have any queries, don't chat there. I will not know. Okay, don't chat there. I will not know. That will only be stopping the speed of the class. Okay, as of now, you can continue to text me as and when you have a doubt, and I will try to, whenever I'm looking at it, I will try to clarify the same. Okay, so let's work. And the last thing which I want to, as a ground rule, which I want to tell you is 90% of the amendments are covered here. 90%. I would not say all the 100% I have covered. Some amendments, I know these are very marginal in nature. Okay, and it will be better if I cover it in the revision sessions. Okay, for example, there is an amendment which in the charitable trust which says 1023C also is included. Okay, for corpus donation. That is, if you previously the law was, if one trust donates to another trust, will it be considered as utilization, provided it is not towards the corpus of the other trust. And they had mentioned only section 11. There is trust is covered both under section 1023C and 11. 1023C is smaller trust, educational institutions or medical institutions whose gross receipt does not exceed 1 crore, or government aided institutions. Those are covered in 1023C. Why? What happens? So, if I donate to the corpus of 1023C, I can still claim it as utilization. There was an interpretation like that. But that interpretation is also nailed by the Finance Act 2020. It says corpus fund of 1023C also. So those like amendments, which is just of clarificatory nature amendment, more to do with clarificatory nature amendments. Okay, those I will cover during the revision session. I will do a solution. I will do a particular question and show you on that. Okay. So the intention is to cover the entire 100% amendment by taking into account both the amendment session and the revision session. Okay, so some amendments, if you just look into the page and say, oh, this amendment is there, but this is not there in our material right now, be sure that will be covered in revision, and those are really marginal amendments. We are better amendments to cover on. Okay. Please don't chat here, please. Uh, I will definitely ensure all doubts are clear. If not in the classroom, at least personally. Okay, but do not chat here. I start with what is for rates of taxation. This morning session is more for focused towards this individual assessees, okay, not completely, but generally I am saying, okay, about this rates of taxation, about the alternative or the optional tax regime that has come into effect under section 115 BAC. Okay, and the evening session will be a continuation. We will be continuing to do solutions, etc. Okay, most probably in the evening we will be also looking at TDS and TCS amendments. Then tomorrow's morning faceless assessment and faceless appeals, along with whatever is the remaining pending area, and tomorrow evening international taxation. But I'm just giving you an overall picture. I'm not saying this is the exact, because international taxation, I don't need 4 hours to explain you all the amendments. The total amendments itself is very less in nature. Okay, so I start with rates of taxation. I start with rates of taxation. The rates of taxation as per the Finance Act, we all know that it is said in Finance Act, remains to be the same for individuals, AOP, HUF, BOI, everybody. Okay, up to 250 nil, beyond that 5%, 10%, 5%, 20% and 30%. Senior citizen, the limit is up to 3 lakhs, and super senior citizen, those who are over 80 years, the limit is up to 5 lakhs. This has not changed. This has not changed. Okay, and in case of firm, 30%. The companies has a small amendment. Okay, when we were doing in the regular classroom, or when we are looking into the previous finance bill, this was 1718, which has now become 1819, which has now become 1819. That 400 crores, okay, the turnover is now 1819 instead of 1718. So 25% will be the tax rate if the gross turnover or gross receipt of the company is less than or equal to 400 crores in the financial year 1819. In the financial year 1819, okay. Otherwise, it is 30%. Okay, that is the small thing. The larger amendment, or the amendment which has an impact, comes in surcharge. The amendment which has an impact, the special rates of taxation remains to be the same. What is that special rate of taxation? STCG on which STT is paid is 15%. LTCG on which STT is paid is first 1 lakh not taxable. Balance is taxable at the rate of 10%. Any other LTCG 20%, winnings 30%, and undisclosed income gets a 60% rate, that is different. Okay, the holistic reason for we taking up this discussion is the amendment that took place in surcharge. Okay, here our focus is not on companies, not on firms, more for individuals, HUF, etc. Surcharge is applicable, we all know, if the total income is more than 50 lakhs. If the total income is more than 50 lakhs, surcharge is applicable. And on the first 50 lakhs, that is up to 1 crore, the surcharge is only 10%. This is neutral. Neutral means whatever may be the source of income, if the total income exceeds 50 lakhs, but it is less than 1 crore, then the rate of surcharge is 10%. If the total income exceeds 50 lakhs, but less than 1 crore, it is 10%, where the total income is more than 1 crore but less than 2 crores. Total income exceeds 1 crore but does not exceed 2 crores. Revenue surcharge neutral. Neutral means whatever may be the income, it is 15%. So the first two brackets, the surcharge is neutral. Neutral in the sense, whatever may be the source of income, whatever may be the head of income, the surcharge remains to be 10 and 15%. After that, there is a change which was implemented in Finance Act 18 itself, 1819 itself. But there is a small addition to that. That's why we are taking it up for discussion. Total income more than 2 crores. Total income more than 2 crores but less than 5 crores. But less than 5 crores. This is where the whole amendment, this is where it has undergone an amendment. 25% of such total income, and that is not neutral, that is not for all heads. Only 15% for, it should be 111. Only 15% for STCG on which STT is paid, LTCG and the LTCG on which STT is paid, and the addition is this particular part, that is dividend income. The addition is this particular part and dividend income. For dividend income also, surcharge is not going to be 25%, not the higher surcharge, but only 15%. Okay? We are unable to catch hold of the logic. I'm not going to give opinions now. Because this is more of a revision and amendment class. I will not waste your time. But this dividend income alone, because the computation becomes little cumbersome. The computation becomes little cumbersome, and the computation will have a lot of interpretational value in the future. Again, where the income is more than 5 crores, the surcharge is 37%, whereas this 15% continues for, continues for STCG on which STT is paid, LTCG on which STT is paid, and dividend income. Again, this is the amendment that gets our focus. This is the amendment that gets our focus. Okay. So, the dividend income, the surcharge on dividend income is going to be 15%. Otherwise, no other amendment in surcharge. Okay. We know it is a continuous process. So, as an addition here itself, some amendments get repeated once or twice, once during that head, once during the place where I want it to be repeated. As an amendment, I'm also giving you here itself the amendment of section 57, deduction from dividend income or income from mutual funds. Deduction from dividend income or income from mutual funds. Before going into this particular aspect, let me give you a small idea that dividend income is now taxable in the hands of the recipient, that is the shareholder. Till financial year 1920, the provision was it is taxable in the hands of the company. The company was paying section 115O, dividend distribution tax. Okay, the company was paying dividend distribution tax. So it is exempt in the hands of the shareholder, but where the shareholder is an individual or HUF, it is exempt up to 10 lakhs. More than 10 lakhs, it is taxable at 10%. At that time, that was the provision in 1920. 115O was removed from the law. 115O got removed from the law, which means they said companies are now no more liable to pay dividend distribution tax and shifted back the liability to the recipient, shifted back the liability to the shareholder. So now it is the shareholder who is liable to pay, and he is liable to include the whatever dividend he received in the total income. Companies have a deduction. I'm not going to cover it here. Let me cover it elsewhere. For others, can I claim deduction? Now, for example, if I have interest income, I can claim collection charges, and I can also claim the interest paid for loan taken for the purpose of investment. Okay, like that, section 57 gives areas where deduction can be claimed. With regard to dividend, what deduction I can claim? There is only one deduction I can claim, that is interest expenditure will be allowed. There is only one deduction, that is interest. What is that interest? Sir, I have taken a loan for the purpose of investment. My dear friends, I took a loan and invested in the shares of a company. The dividend I receive is my income, and the interest I pay is my expenditure. Can I claim this expenditure against my dividend income? The answer is yes. I can claim against my dividend income, but the law has not given me an open hand. The law has said such interest is restricted to 20% of dividend income. It is not that I can claim it in entirety. I have been restricted to 20%. Suppose if my dividend income is 1 lakh, maximum interest deduction I can claim is only 20,000. If actual interest paid is less, that lesser amount, or 20%. In other words, for our easy understanding, actual interest or 20% of dividend, whichever is less. Before going to the alternative tax regime, let's look into the surcharge related or this interest, the dividend related questions, so that we are clear. Okay, so a practical, some of the practical application question. Okay, right. Question number 1. Okay. I'm in page number 12, my dear friends. Question number 1. Income from salaries computed 56,40,000. Gross dividend from domestic companies 570. Collection charges for earning such dividend 15,000. Collection charges for earning such dividend. Okay. Collection charges for earning such dividend cannot be claimed as deduction. Cannot be claimed as deduction. Section 57 is clear. Only interest can be claimed, not collection charges. Interest on loan taken for investment on which you have received a dividend 1,20,000, compute tax. Okay, okay, right? So computation of total income, okay, salaries as computed. So they have adjusted everything and given to us as computed is 56 lakhs 40,000. Okay. Other sources, dividend from domestic companies. Dividend from domestic companies 5,70,000 less. I am writing here so that you are more clear. Collection charges cannot be claimed. We cannot claim. Okay. Interest on investment. Okay. This I will further divide into actual interest. Okay. Actual interest comes to 1,20,000. 20% of dividend income. 20% of dividend income comes to 1,14,000. So whichever is less, I can only claim 1,14,000. It is restricted to 20% of dividend received. So 5,70,000 minus 1,14,000, 4,56,000. 5,70,000 minus 114, gross total income, which also becomes the total income. We don't see any deduction. Gross total income, which also becomes the total income, okay, comes to 60,96,000. Okay, 60,96,000 if the total income of the individual exceeds 50 lakhs but less than 1 crore. We remember that if the surcharge is applicable. The question has not given any senior citizen, etc. So it is the normal computation which we have to take. Computation of tax, base tax. I hope the class can understand this. Okay, 60,96,000 minus 10 lakhs into 30% plus 1,12,500. Okay, repeating, up to 250 nil, 250 to 5 lakh 5%, 5 lakh to 10 lakh. Okay, it is going to be 20%. So up to 10 lakh, we all know it is 1,12,500. So 50 lakh 96,000 into 30% plus 1,12,500. That's what I have done. Okay, 6096 minus 10 lakh into 30% plus 1,12,500. Okay, add surcharge at the rate of 10%. It is a neutral rate. Neutral means it is not going to be different for dividend because up to 2 crores I don't have a problem. So into 10%, okay, and add HEC at the rate of 4%, and HEC at the rate of 4%. Okay. Basically, this question is to say that 20%. நிறைய questionல I have ensured that you are covered. Okay. Now, an individual earns a business income of 3 crore 10 lakh, dividend income of 19 lakh 75,000. Okay. Business income. Okay. So this is where the surcharge comes into play in a bigger manner. The amount and the column la na podla because my focus is to make you understand the provision. Business income is 3 crore 10 lakhs. Dividend income, which is IFOS, okay, is 19 lakh 75,000. Okay, total income, okay, 3 crore 29 lakh 75,000. 3 crore 29 lakh 75,000. Computation of tax. Okay, computation of tax. Base tax is the same working. Base tax is the same working. That is this minus 10 lakhs into 30% plus 1,12,500. Base tax remains to be the same working, 97 lakh 5,000. Okay, repeating how I computed base tax. Up to 10 lakhs, it is 1,12,500. Remaining 2 crore 29 lakh 75,000. I'm sorry. 3 crore 19 lakh 75,000. 3 crore 19 lakh 75,000. Okay, into 30%. Into 30%. Okay, hope my. Okay, 97 lakh 5,000. Add surcharge. Add surcharge. How to compare? Because the total income exceeds 2 crores. If the total income exceeds 2 crores, surcharge is 25%. If the total income exceeds 2 crores, surcharge is 25%, my dear friends. Surcharge is 25%. But if the total income includes income like dividend income, STT paid STCG or LTCG, for those things, surcharge will continue to be 15%. What is the complication here? STCG on which STT paid and LTCG on which STT paid is taxable at special rates. So, while working itself, we would have said income taxable at normal rates, income taxable at special rates. In the next questions, I will work out and show you. So, you can easily see the connect. You can easily see the amount itself. For example, STCG on which STT is paid 5 lakhs abdina into 15%. Okay, that 75,000 will be separate, and on that you can compute 15% surcharge. Same LTCG. Ana dividend income is not a special rate taxation. It is for this tax includes dividend income also. It is falling under the normal rate taxation. So how to compute surcharge for dividend income. How to compute this surcharge for dividend income? Okay, it is a cross multiplication formula. இப்போ 3 crore 29 lakh 75,000 total income, for which tax is 97 lakh 5,000. What it will be for 19 lakh 75,000? Okay, on that 15%. Shall I repeat, my dear friends? The income is 3 crore 29 lakh 75,000. The tax is 97 lakh 5,000. Dividend income is 19 lakh 75,000. For that, what will be the tax? On that, I will compute 15%. Add surcharge for dividend income at 15%. For dividend income at 15%. Please understand how we are going to apply this. 97 lakh 5,000 divided by 3 crore 29 lakh 75,000 into 19 lakh 75,000, the whole into 15%. The whole into 15%. Once more, okay, if you are referring to the Excel, you will be able to, okay. For 3 crore 29 lakh 75,000, my total tax is 9705. First, let me find out the tax. What is for? Okay, 97 lakh 5,000 into 1975 divided by 329. On this 15%. On this 15% is the surcharge. On the balance at 25%. On the balance at 25%. So 97 lakh 5,000 minus 581 270. 97 lakh 5,000. Adila I have put surcharge for 5 lakh 81 270 on the balance at 25%. Add HEC at 4%. For those who are just attending the amendment class, who are not part of the main class, okay, those who are there in the main class very much knows this. But just as a caveat, I tell you, I'm very poor in Excel. Okay, ஏதோ எனக்கு basics of Excel தான் தெரியும். Okay, when I was in practice, when I started practice, இதெல்லாம் இல்லாத போது, so I started with normal things. So I will not be as fast as you in Excel, and as உங்களுடைய formulasலாம் I'm very poor on it. Okay, so my dear friends, okay, so the holistic thing is doing this surcharge. இது வந்து I'm not speculating. Okay, it is just a wish. If I am the examiner, I will ask it in MCQs in 1 or 2 questions. What is the surcharge on the dividend income, or what is the total surcharge? What is the total surcharge, which is nothing but, okay, these two. Okay, so that will be the surcharge, total surcharge. But generally, I am telling you how to compute is, okay, as a theoretically, if you want to understand, total tax divided by total income into dividend income will give me the tax on dividend income. Will give me the tax on dividend income. In that, if I apply 15%, that will be sufficient. Question number 3. An individual earns business income of 7 crore 5 lakh, STCG on which STT paid 45 lakhs, gross dividend 28 lakhs, interest on earning such a dividend amounted to 5 lakhs, compute tax. Business or profession is 7 crore 5 lakhs. STCG on which STT is paid is 45 lakhs. Dividend income, okay, the gross dividend 20 lakhs less interest, okay, actual interest comes to 5 lakhs, 20% of dividend, 20% of dividend comes to 4 lakhs. So whichever is less, so 4 lakhs, and that makes it 20 minus 4 lakhs, 20 minus 4 lakhs, 16 lakhs. So this gives me a total income 7 crore 66 lakhs. This gives us a total income of 7 crore 66 lakhs. And please look into our computation. Okay. Income taxable at normal rates. Income taxable at normal rates, this minus STCG, because that is taxable at a special rate. For this, the tax will be, we all know, this minus 10 lakhs into 30% plus 1,12,500. 7 crore 21 lakhs minus 10 lakhs. So 7 crore 11 lakh into 30% plus 1,12,500. 1,12,500. Income taxable at special rate, that is STCG on which STT is paid. The tax rate is 15%, that is this 45 lakhs, okay, into 15%. Okay, so total base tax comes to, okay, this amount. Total base tax comes to this amount. Add surcharge, add surcharge on STCG at 15%. This is where I said here it is easy to compute. into 15%. I have the tax separately. I have the tax separately, so it becomes easy to compute. Okay, I have the tax separately, so it becomes easy to compute. Ana enga namakku difficulty na dividend is part of this. Dividend we don't have a tax separately, so that's where we get the challenge. Okay, on dividend income, but that will not be a challenge for us. Okay, nothing but 2 crore 14 lakh 42,500 divide. Okay, uh, 214,42,500 divided by 7 crore 21 lakhs into 16 lakhs. This into 15%. Okay, the whole thing is where I am coming to, or where you should be cautious in examination, is two places. Exam or tension process. In that process, we should not take this 221 divided by 766. Okay, we should not take this 2 crore. Or exam tension la nama enna panniduvomna 2 crore 21 divided by 766. No, this 766 la 675 is separately identifiable. 2 crore 14 divided by 7 crore 21, normal tax divided by income taxable at normal rate into dividend. The second place you have to be cautious is in an exam like question paper near you. If you look at the question paper, it will be 20 lakhs dividend, but what is taxed is only 16 lakhs because we gave a deduction. So these two things, please be little cautious. I'm not saying that you will do the silly mistakes by intention, but in the process of examination, you should not get that small feel, or enthusiasm will also kill, or some places because of tension it will be so. So this divided by this into 16 lakhs. Okay, on this also 15%. On this also 15%. On the balance income at norm at okay 37%, at 37%. So this tax minus the tax for which I have already computed into 37%. I hope this is clear. Okay, so how to compute the surcharge on dividend income, because that is an amendment that took place in FA 2020. Okay, right? So it is always better. Okay, it is always better to try some questions, and we are not wasting the classroom time for that. Okay, question number 4 and 5, I want you to try it out later, but the solutions will be there in the same Excel sheet which you are seeing. Okay, not now, whenever you are free during the day, okay, or after the class, just try it out once, question number 4 and 5. Okay, and do not worry about it. You have to just verify the answer. You need not check the answer. I didn't give you one ground rule, okay, which I also think from the perspective. I am not that flamboyant student and all. I'm a very normal person. Okay, so I want to give you this update also. Be it in the amendment class, be it in the revision class, I'm not going to ask you questions. Okay, I'm not going to ask you question. I'm going to just share the little knowledge I gained and leave it, because of two reasons. One, if I ask a question and if you are unable to recollect the provision, that will be a mind block for you permanently. Ayyo, I haven't prepared well. Okay, will be there in your mind. It is not so. I have a different perspective about examination. So I'm not going to ask questions. Many of you, some of you in fact texted me asking what are all the provision we should be studying before attending the amendment class. I said don't study anything, just come to the amendment class. Okay, so don't worry. First reason is that I'm not going to create a mind block in you. And the second reason is the classroom time gets expanded as we go by. Okay, it will not be useful for the whole set of people. So I'm not going to ask you any question. Probably I might give you some homework, and again I'm not going to check that homework. It is self-evaluation and you yourself checking with the Excel sheet for the answer. So be sure that this is not an area where I'm going to put the question in front of you and wait for your answer. No, I'm not going to do that. I'm just going to teach you the provisions. Okay, I believe that you have prepared very well, and I believe that it will click in your examination. And even a student who has not prepared so very flamboyantly or so very confidently, I wish if they attend our amendment class and revision class, they should be able to clear the examination. That is my intention, and not to just put on display my knowledge or my little knowledge or your preparation. Definitely, I'm not going to question. Please relax. If you have that at the back of your mind, please remove that. I'm not going to question you at all. The next major amendment for individuals which took place. Theoretically, this amendment is major. Practically, the number of people who might follow might be lesser, but as the days goes by, probably this will mature. Is the optional tax regime or the alternative tax regime which is applicable for them. The individuals has a benefit which is brought inside income tax law, and I have always told you, whenever it is section 115, we are speaking about a charging section. Whenever it is 115, we are speaking about a charging section. This optional tax regime is available for residents as well as non-resident individuals. HUF is a tag along with individual wherever we study, except rarely sections like 80 EE, education, etc. Otherwise, wherever we study individual, we are also looking into HUF. So this is an optional tax regime brought in under section 11, not in Finance Act, but under the income tax law itself. Slab rates are changed. Slab rates are changed for income taxable at normal rates. The slab rates are changed for income taxable at normal rates. Okay, how does the slab change? Up to 250, here also nil. And then every 250 till 15 lakhs, there is an expansion of 5%. Up to 250, here also nil. Next to 250, 5%. Up to this point, it tallies. It tallies means it tallies with our Finance Act also. Rates in Finance. Next to 250 is only 10%. Up to 7,50,000 is only 10%. Next to 250, it goes to 15%. That is up to 10 lakhs. Next to 250, up to 12,50,000, 20%. Next to 250, 25%. So increase 250, 5% rate increase. Up to 15 lakhs. Start from 0 to 250, here it is 0. Next to 250, 5%. Next to 250, 10%. Next to 250, 15%. Next to 250, 20%. Next to 250, 25%. Increase by 2,50,000. Increase the rate of tax by 5%. More than 15 lakhs, it is 30%. Optional tax regime. How do I say optional? I'll come to that. This is the rate. Increase by 250 and you will hit that 5% rate increase. Please remember the following. Rebate is still available. Rebate is still available. That is, if your total income has not exceeded 5 lakh, that 12,500 you can still claim. Special rates of tax remains to be the same. Special rates of tax, I told you it is only for slab rates. It is only for slab rates. Special rates of tax remains to be the same. Surcharge and HEC remains to be the same. Whatever we have been working, that 10%, 15%, 25%, 37% all remains to be the same, with that special surcharge of 15% remaining constant for LTCG, STCG, dividend income. And the most important to understand, is individuals who are senior or super senior citizen are also eligible for basic exemption of 2,50,000 only if they opt for 115 BAC. The higher basic limitation of 3 lakhs or 5 lakh is not applicable if you opt for optional tax regime. Shall I repeat? Friends, normally in our slab system, if an individual is a senior citizen, the basic exemption limit is 3 lakhs. And if an individual is a super senior citizen, the basic exemption limit is 5 lakhs. That is not for optional tax regime. Optional tax regime, now premise 115 is a rate specific. Here they have said up to 2,50,000 nil. They have not said it is for senior citizen up to 3 lakhs, super senior citizen. It is not said in 115 BAC. It is not said in 115 BAC. So, if you are senior citizen or super senior citizen also, okay, the basic exemption limit will be 2,50,000 if you have opted for 115 BAC. One of the point which is very important to note down. Do not think that they will enjoy. When you work out the option and see, probably you should work out both. But generally, they will not enjoy the higher basic exemption limit. If in case connection is lost, because sometimes my internet goes little unstable, I will please wait till I connect. I will definitely connect using some other mode. Exemptions, benefits, deductions that cannot be claimed. Once more, that are not available. That are not available. Remember, these things are not available to us. Okay, what are all they? Leave travel concession. You remember, only for 2 children you can claim, that is not available. The major is HRA is not available. Other exemptions like children education allowance, hostel allowance, இதெல்லாம் claim பண்ணாம இருக்கதே better. Special allowances paid to MPs and MLAs. You cannot claim standard deduction, entertainment allowance, tax on employment or professional tax, the other name is. Okay, in salaries, you cannot claim exemptions, except later I will tell you. You cannot claim any exemptions and you cannot claim any deductions. To put it short, in salaries, you cannot claim any exemption or any deduction. Whatever salary you receive will become taxable under the optional tax regime. HRA claim பண்ண முடியாது, children education allowance, hostel allowance, okay, those things cannot be claimed. And also you cannot claim 50,000 standard deduction, entertainment allowance, that is anyhow only for government employees, not to worry much about it. Under the head house property, interest taken for self-occupied property. Remember, I am very clear. You can still claim for let out property, but you cannot claim for self-occupied property. That 2 lakhs, okay, which you will adjust it against your salary income or any other income, adu ipo claim panna mudiyadhu. Loss under house property, okay, I should have continued and stopped. As I told you, this material will also be posted, or if you can just make a marking. Cannot be claimed against other heads. Okay, loss, okay, in head you cannot claim the adjustment. You cannot claim the adjustment interhead. Intrahead, you have 2 house properties. One is a loss, another is an income, that you claim. Intrahead you claim. Both are let out, you can claim. But otherwise, you cannot. Under business or profession. Under business or profession, you cannot claim additional depreciation. That 20% additional depreciation available for manufacturing units or for new plant and machinery, which is used only exclusively for manufacturing process, you cannot claim. You can claim normal depreciation. 15% claim பண்ணலாம். Under 20% claim பண்ண முடியாது. Deposit based deduction, T development account, site restoration fund. In that T development is the popular area of questioning. Site restoration, right from introduction till today, CA Institute has not questioned it. Okay, scientific research expenditure, in-house research expenditure, 100% you can claim for all. Till last year it was 150%. Now you can claim 100%, and any contribution to an external agency you can claim 100%. Ana, if you are opting for 115 BAC, you cannot claim that. You cannot claim that. Specified business expenditure, you cannot claim it. Also agricultural and skill development. Skill development skill development is only for manufacturing companies. Skill development is only for manufacturing companies. So we can restrict ourselves to agricultural extension program, where you were previously claiming 150%, now 100%. All these things cannot be claimed. Remember, I am giving you what are the list that cannot be claimed. Additional depreciation cannot be claimed. Deposit-based deduction cannot be claimed. Scientific research cannot be claimed. Specified business cannot be claimed. And agri extension program, because skill development you can leave it. That is not for individuals and HUF. It is only for companies. Okay. So you can leave that. Agriculture extension program you cannot claim. So these are in PGBP. IFOS ஒரு standard deduction இருக்கு. What for? That is for family pension. Okay, that is for family pension. 1/3 of the pension or 15,000, whichever is less. 1/3 of the pension or 15,000, whichever is less. That also you cannot claim. Standard deduction for family pension. If you club a minor income, you remember we will give a exemption of 1,500 per child, okay, in the hands of the person who you have claimed, okay, that you cannot claim, okay. Set of chapter. Whatever is the loss pertaining to what we have so far studied. இப்போ so far studied என்ன சார், நம்ம salaries-ல loss வரதுக்கு chance இல்ல. House property loss, you cannot claim. Brought forward loss. PGBP la, if the loss is due to unabsorbed depreciation being additional depreciation, okay, loss arising due to additional depreciation, that also cannot be brought forward and adjusted. So whatever loss we have so far seen, from whatever we have so far seen, loss brought forward under house property and loss arising due to additional depreciation, remember these alone. Okay, cannot be brought forward and adjusted. Sir, last year my income, okay, to make it a little more clear to you, my dear friends, let us suppose that my profit before claiming depreciation for PY okay 1920 is 10 lakhs. My profit before claiming depreciation for the financial year 1920 is 10 lakhs. Less normal depreciation is 9 lakhs. Additional depreciation is 3 lakhs. So what happens is loss, okay, which is popularly known as unabsorbed depreciation, which is popularly known as unabsorbed depreciation, is 2 lakhs. Okay, this unabsorbed depreciation is due to additional depreciation. Yena 10 lakhs profit, 9 lakhs is only normal depreciation, still you add 1 lakh profit. Because I want to promote the manufacturing sector, I gave an additional depreciation of 20% of new plant and machinery purchased used for manufacturing process, which came to 3 lakhs. This additional depreciation cannot be claimed if you are following 115 BAC. If you opt for 115 BAC, not in friends. Whatever now I am teaching is for 115 BAA 115 BAB, 115 BAC, 115 BAD. 4 section ko, whatever I am now sharing with you. Okay. This additional depreciation cannot be claimed in any of those sections. Wherever we are following optional tax regime, you cannot claim this additional depreciation. So when you cannot claim this additional depreciation, the profit would have been 1 lakh, but the loss is 2 lakhs, which is due to additional depreciation, which has been brought forward. Now the law says, loss arising due to additional depreciation charged in any of the previous year cannot be brought forward and adjusted. Remember, this point is not just for 115 BAC. 115 BAC individuals who are going to opt for this is very less. This point is more important. When I do the revision classes, I will tell you 115 BAA, BAB, how this point becomes relevant for us. At that time, I will tell you how the block of asset will be adjusted. Okay, so loss arising due to depreciation, unabsorbed depreciation cannot be adjusted. None of the deductions can be claimed except 3. None of the deductions can be claimed except 3. What are all they? 80 CCD subsection 2, employer's contribution to pension fund, which is restricted to 10% of salary. Which is restricted to 10% of salary. Employer's contribution to provident pension fund, which is restricted to 10% of salary. 80 JJAA, new employment. New employees, 30% of additional wages only for those employees who have minimum worked for 240 days, whose salary is less than 25,000. Under deduction, you can still claim. And don't worry about this. This is only for non-residents. Deduction for unit located in International Financial Service Center, which is there in GIFT, Ahmedabad. Okay, we'll see about this in our revision session. I will give you IFSC provisions, but generally these 3 deductions, amongst that remember 2. Exemptions that cannot be claimed. Export-oriented units 10AA and 1032 I have already covered in clubbing. Okay. Exemptions and benefits or deductions that are still available. That is, the assessee can continue to claim it. Transport allowance for physically challenged employees, 3,600 rupees per month. You can claim. Official allowances, daily allowances. No change in your gratuity exemption, commuted pension, adalla you can continue to claim. Proceeds of life insurance policy is still exempt under 1010D, 20% of policy value, 10% of policy value. RPF withdrawal, you can still continue to claim exemption. NPS withdrawal, you can still continue to claim. Interest on PPF, interest on Sukanya Samruddhi account, all these things you can continue to claim. These are not going to get affected. Okay, in this you have to just remember the first 4. Okay, that's enough. Okay. AMT not applicable. Okay, for them AMT is not applicable if you opt for 115 BAC, and where the employee is willing to opt for 115 BAC, then he should declare it to the employer. Employer will deduct tax at source as per the provisions of 115 BAC. Where an employee wants to opt for 115 BAC, give a declaration to the employer saying that I am opting for 115 BAC. Employer will deduct tax. A similar amendment is made in TDS provisions also, which we will see. Okay, which we will see. I know first point I am leaving it open because I know that it has to be thought more for company and not the hold yourself. Okay. Is the option year to year can I excise? Yes, if you are a non-business assessee. If you are a non-business assessee, where assessee have income under business or profession, where the assessee has income under business or profession, option only once can be exercised. And it cannot be withdrawn. Where you are withdrawing it, you cannot re-enter. Where the assessee does not have business income, where the assessee does not have business income, then year to year basis take the option. Year to year basis take the option before filing the of due date. One more benefit the law has given you is, to your employer you declared that you will follow 115 BAC. But before filing, you are changing your mindset. I can go by normal provision. File your return as per normal provision, nothing wrong. Vice versa also. To your employer, you did not declare 115 BAC. So he deducted tax as per normal provision. Later at the time of filing return, you want to opt for 115 BAC. Opt it. Where employee has expressed his willingness to opt for 115 BAC, then he cannot withdraw the same for TDS computation of employer. However, before filing of ROI, employee can opt for normal mechanism, vice versa also possible. Take a couple of minutes, read through once. Seemingly a lengthy arena, but actually we can easily remember it. Rates of taxation. Okay, please don't look at the material, look at the vacuum empty space and try to recollect. Okay, zero, every 250 increase 5% should be the increase. 0 to 250 nil, 250 to 5 lakhs 5%, 5 lakh to 750 10%, 750 to 10 lakhs 15%, 10 to 1250 20%, 1250 to 15 lakhs, 25%, and more than that, or okay, more than 15 lakhs, 30%. Okay, every 250 increase, there is a 5% increase. This one thing to remember. If I am opting for optional tax regime, what are all the points to remember? Don't look at the material. Don't look at the material. Let's just recollect. I can still claim 87A. Special rates of taxation, surcharge, HEC all remains the same. What is the most important to remember? This basic exemption limit is going to be 250, even for senior citizen and super senior citizen, because this is not coming under Finance Act. This is coming under uh, the special rates of taxation, or it is a charging section. So that extra thing is not there. Can I opt for optional tax regime? Depends upon what you are going to forego. What am I going to forego? Going headwise. In salaries chapter, you cannot claim any exemption except exemption for retirement benefits. Other gratuity, pension, leave encashment, still there. All the regular or recurring thing which you will claim, like leave encashment, HRA, children education, etc., cannot be claimed. Deductions cannot be claimed. Standard deduction, entertainment allowance, employment, tax on employment cannot be claimed. But if the exemption is for official purposes, still you will be eligible to claim. Transport paid to handicapped employees, physically challenged employees, they can still continue to claim. House property chapter, self-occupied house property na interest lost, cross-head set off lost. PGBP, whatever special benefits enjoyed, additional depreciation, scientific research expenditure, deposit-based deduction, agricultural exemption, agri-based deduction, and specified business cannot be claimed. IFOS, அங்கேயும் ஒரு standard deduction இருக்கு for family pension, cannot be claimed. Clubbing, 1500 cannot be claimed. For long, I want to scrap that provision. Okay, or increase the amount to 15,000. And then losses arising due to whatever we have already studied. If it is going to be brought forward, you cannot set it down. No deduction can be claimed except 3, but for your understanding, 2. Employer's contribution to pension fund, 10% of salary, you can still claim it. And employment, for generating new employment, you can claim. No AMT. Okay. TDS will be based on 115 BAC. Inform your employer. Later you can, while filing your return, you can change your mind. If you have PGBP, this option is only once. Otherwise, year-to-year basis. I'm going to optional tax regime questions. Okay, from question number 6. 5 and 6 you will work out. Okay, and check it out. I mean 4 and 5 you will work out and check it out. Okay, quick optional tax regime question number 6 we will start and moving forward. Dinesh Jain, working in Frizzle Limited, gives you the following particulars and seeks your opinion as to whether he should go for optional tax regime or continue with the normal tax regime. Gross salary after claiming HRA exemption of 2,20,000 is 2210. Professional tax. Rent from lessed out property till last year this was self-occupied 26,000. interest on let out property, gross dividend income, interest on earning such dividend income, interest of his minor son Jivnash. Okay, how to club it. Okay, so quickly. Normal provision, optional tax regime. Okay, let's work side by side. Normal provision and that optional tax regime. Gross salaries. Okay, gross salaries 22 lakh 10,000. I will tell you when I am writing optional. 22 lakh 10,000. Standard deduction 50,000. Okay, 50,000. Tax on employment, that is professional tax. Professional tax 2,400. So if he is opting for normal tax regime, okay, it is 21 lakh 57,600. If he is opting for normal tax regime, it is 21 lakh 57,600. But if he is going for optional tax regime, gross salaries, okay, after adding back HRA exemption, claim 2210 plus 210, 22 lakh 10,000 plus 2 lakh 10,000. This will be in the optional tax regime. Okay. Okay, this will be in the optional tax regime. Normal tax la 2157,600. Optional tax regime la I cannot claim standard deduction, I cannot claim professional tax, and whatever HRA exemption I already claimed. Okay, friends. So, under our optional tax regime, I cannot, the gross salaries, I need to add back the exemption claim, the HR exemption claim, and I cannot claim my standard deduction. I cannot claim my professional taxes. Okay, then goes the house property chapter. Okay, rent from let out house property, this was self-occupied till last year, 26,000 per month. Okay, rent of let out property. Okay,
The HR is 2,10,000.
thanks. Rent from let out property is 26,000 per month. 26,000 into 12. Sorry. 26,000 into 12. Okay, which is what is popularly known as NAV. Other things not given, this becomes NAV. Standard deduction at 30%. Standard deduction at 30%. Okay, which is available even in the optional tax regime. Now, that is still claimable. Okay, interest on borrowed capital. Okay, interest on borrowed capital, interest on let out property 2,40,000. Okay, so in my normal tax regime, what happens is, in my normal tax regime, I have a loss of 21,600, which can be set off against my salary income. In my normal provision, I have a loss of 21,600, which can be set off against my salary income, whereas it is not possible under optional tax regime. Whereas the same is not possible under optional tax regime because cross head set off. இப்போ இன்னொரு house property இருக்கு, அதுவும் let out, that has given me an income of 1 lakh. Both under normal and under optional, 1 lakh minus 21,600 would be the net income to be taken to the outer column. That is acceptable. That is acceptable. But when there is a loss from one property, under normal tax provision, it says loss from property can be set off against any income. That has been removed in optional tax regime. You cannot cross head set off, so it cannot be claimed. That 21,600 cannot be claimed. That 21,600 cannot be claimed. Okay. Dividend income is 54,000. Dividend income is 54,000 less, okay, interest. I'm repeating that provision so that it stays in your mind. Okay, actual interest, okay, 10,000, okay, 20% of dividend income, 20% of dividend income. So actual is only less, okay, actual is only less, whichever is less. So this 10,000 is only less. So taxable dividend income is 54,000 minus 10,000, 44,000. இங்கேயும் அதேதான். I never said I will not. Only one deduction not given in IFOS. Family pension இருந்ததுன்னா அதோட standard deduction you cannot claim. Other deduction I have not touched. So here also it is the same 44,000. You can claim this deduction. There is nothing that stops you. Interest income of minor child. Interest income of minor child 15,000. We assume that DJ's salary is income is more than his spouse. Okay, so interest income of minor child 15,000. Exemption under section 1032. Exemption under section 1032 1,500. Okay, so you will get okay 13500 here. This exemption cannot be claimed under optional tax regime. This exemption cannot be claimed under optional tax regime. That 1,500 benefit you cannot. Okay. As of now, in this question, I don't see any deduction aspects in this question. So our gross total income slash total income. So our gross total income slash total income comes to this amount. Base tax, I'm slightly working elaborately in our optional tax regime. Okay, up to 2,50,000. Okay, it's zero. And not இதுக்கு நார்மலுக்கு அப்புறம் வரலாம். Okay, next 2,50,000 at 5%. Okay, next 2,50,000 into 5%. Next 2,50,000 at 10%. Okay, increase by 250, increase by 5%. Okay, so up to 5. Okay, 750 over. Next 2,50,000 at 15%. Okay, so 2,50,000 into 15%. Okay, okay, next 2,50,000 at 20%. Next 2,50,000 at 20%. Okay, okay, so 250, 5 lakh, 750, 10 lakh, 1250. Next 2,50,000 at 25%. On the balance, that is 24 lakh 79,000 minus 15 lakhs into 30%. Repeating, on the balance this amount, okay, this amount minus 15 lakhs into 30%. Base tax இங்க டைரக்டா போடுறேன். Okay, 21,93,500 minus 10 lakhs into 30% plus 1,12,500 இங்க total. and HEC at the rate of 4%. Okay, friends, on a tax based decision, you should write that normal tax. Tax based மாத்திரம் இருக்க முடியாது. It's a financial management decision. What is the money available to you in hand? இந்த மாதிரி நிறைய இருக்கு. But on tax based decision, you will write the conclusion as normal tax should be opted. Okay. For future questions purposes, up to this, what is the tax nu பார்த்து வச்சுப்போம். Okay. So, in our optional tax regime, what should we do is total income minus 15 lakhs into 30% plus 187,500 plus 187,500. Easier. Okay. For our future questions, I have just computed up to 15 lakhs. What is the tax under normal tax regime? Optional tax regime, sorry. Up to 15 lakhs, what is the tax under optional tax regime? It comes to 187,500. So, in the future questions when we are working out, okay, it will become easy for us to say whatever amount we get as income minus 15 lakhs into 30% plus 187,500 plus 187,500. Okay. For this conclusion, assessee should opt for normal tax regime considering the taxes are lesser. Only due to tax I am taking this decision. Question number 7. Mr. V.P. Palnichami is a senior citizen, has an income from fixed deposit with bank rupees 12 lakhs. He does not have any other income. Compute which is more beneficial, optional or alternative. Please don't tell him. Okay, 12 lakhs. Same column, whatever we are following. Okay. Base tax. Base tax. My dear friends, 12 lakhs minus 10 lakhs into 30% plus, okay, 12 lakhs plus minus 10 lakhs into 30% plus for them up to 3 lakhs the basic exemption limit. Balance இருக்கிற 2 lakhs, balance இருக்கிற 2 lakhs into 5%. So 10,000 தான் உங்களுக்கு வரும். Okay, 10,000 தான் உங்களுக்கு வரும். Shall I repeat? For them, base tax is up to 3 lakhs, a basic exemption limit. So the 2 lakhs into 5%, 10,000. அப்புறம் ஒரு 1 lakh, oh sorry, plus 1 lakh 10,000, sorry. Plus 1 lakh 10,000, sorry. Plus 1 lakh 10,000. Okay. And then on the balance 2 lakhs into 30%. 170. 170. I will work out the base tax for the optional tax regime. Okay. Up to 5 lakhs na amikren, because that will be, we all know that it is only 2,50,000 into 5%. Inga namakku and the basic exemption of 3 lakhs kadayadu. Okay. Then next 2,50,000 at 10%. So 2,50,000 into 10%. Next 2,50,000 at 15%. Okay. So next 2,50,000 into 15%. Okay. Up to 10 lakhs over. Balance 2 lakhs at the rate of 20%. Balance 2 lakhs in a total income 12 lakhs down at the rate of 20%. Okay. So inga base tax, okay, total base tax, here it is 1,70,000, here it is 1,15,000. Okay. And HEC at 4%. Okay. So this optional tax regime generally in your future for your practical reference, senior citizen கொஞ்சம் verify பண்ணுங்க, இது கொஞ்சம் useful. Okay. Question number 8. Saranya Ashwant has a self-occupied property. The interest for the current year amounts to 2,10,000. Brought forward loss of last year interest for the same property 75,000. STCG on sale of jewellery, STCG on sale of shares on which STT is paid, interest income, investment in NSC and other eligible. Compute which is more eligible, which is more beneficial, that is normal tax regime or alternative tax regime. computation of total income. House property. Okay, house property. NAV of, we all know, NAV of self-occupied property, okay, is nil. Is nil. NAV of self-occupied property is nil. Interest on borrowed capital restricted to my dear friends, even though it is 2,10,000, it is restricted to 2 lakhs. It is restricted to 2 lakhs. So under the normal tax regime, you can claim this 2 lakhs, whereas under the optional tax regime, you cannot claim it. Under the optional tax regime, this benefit cannot be claimed, so nil. Under the normal tax regime, you can claim that 2 lakhs as loss. Under optional tax regime, you cannot claim that any interest on borrowed capital for self-occupied property. Nama anga first question, when we did the Dinesh Jain question, let out property. அங்க interest claim பண்ணலாம். Only that loss cannot be set off. இப்ப income இருந்ததுன்னா okay, but here you cannot claim it. Okay, brought forward loss from house property, okay, can be claimed or adjusted only against income from house property. Okay, this is also you cannot do even under the normal provision. நமக்கு தெரியும், once you brought forward one-to-one correlation, that head against that head only. So brought forward house property loss cannot be claimed against any other income other than house property. So here you cannot claim. Capital gains. Capital gains. Okay, STCG on sale of jewelry 9 lakhs. STCG on sale of jewelry, which is taxable at normal rates, my dear friends, 9 lakhs. Okay, STCG on sale of shares on which STT is paid. STCG taxable under 111A. Okay, 3,10,000. 3,10,000. Okay, IFOS interest income. Interest income, my dear friends, 12 lakhs. Gross total income. Gross total income. 22 lakh, 24 lakh. Deduction under section 80C restricted to, okay, because it says investment in NSE and other eligible 180, but it is restricted to 1,50,000 and that cannot be claimed here. That cannot be claimed here except 80 CCD part 2 employer contribution to pension fund and employment generation 80 JJA. Nothing can be claimed under optional tax regime. Okay. Computation of tax, base tax. In this case, in this case, okay, so income taxable at normal rates. Income taxable at normal rates. Okay, 20 lakh 60,000 minus 3 lakh 10,000. Okay, income again I'm writing the same at normal rates for optional regime. For optional regime, 24 lakh 10,000 minus 3 lakh 10,000. Income taxable at special rates, that is 111A, is in whatever, in both the cases 3 lakh 10. Special rates of taxation does not change. Special rates of taxation does not change. Take your time. Okay, 17 lakh 50,000 minus 10 lakhs into 30% plus 1 lakh 12,500. Okay, 3 lakh 37, 7 lakh 50,000 into 30%. 7 lakh 50,000 into 30% plus 1 lakh 12,500. Inga, okay, I have told you 21 lakh minus 15 lakh into 30% plus 187,500. How I got 187,500? Inga irukku. Okay, we did it. Okay, we did in a question and saw 187,500 up to 15 lakhs. So I'm applying the same formula here. I'm applying the same formula here. Okay, 21 lakh minus 15 lakhs into 30% plus 187,500. This is in both the cases 15%. In both the cases 15%. Okay, total base tax HEC HEC at the rate of 4%. HEC at the rate of 4%. So you will write the conclusion, normal tax is better. Normal tax is better. Assessee has to opt for normal tax only on the basis of tax. ஒரு ஒரு since it's Excel, we can just check and see. For example, okay, suppose assessee is not investing this. Suppose assessee is not investing this, you can see optional tax regime is better. Or cash flow basis, if you think no, optional tax regime might be better. Okay, because the net cash in your hand will be more, but our questions are never going to be cash flow basis. I am not going to be Dinesh Jain, okay, teaching you financial management. Only on tax aspect, if you ask me, this is the best option. Okay, that is why I ask you to write the conclusion as on the basis of tax, not on the basis of financial management. Okay, other future life, somebody coming and framing a question with a financial management perspective, it would be very different. It would be very different. Okay, okay. Question number 9. Okay. Sriram, employed in a private limited company, provides the following details. Work out the tax under both methods. Basic salary, HRA, rent paid and okay, conveyance allowance wholly for official purpose. Employer and employee contributes 12% of basic salary to National Pension Fund. LTCG on which STT is paid 1,40,000. Okay, right. Basic pay, okay, 1 lakh into 12, okay, 12 lakhs basic pay. HRA received, HRA received 30,000 into 12, 3 lakh 60, which is fully taxable. ஏன்னா அங்க exemption கிடையாது, optional tax regime you cannot claim exemption. Whereas normal tax regime, okay, exemption under section, okay, okay, actual received, okay, 3 lakh 60,000, rent paid minus 10% of salary. Okay, rent paid is in Chennai is residing 25,000. 25,000 into 12 rent paid minus 10% of salary, that is basic pay, no DA given. Okay, so 1,80,000. Okay, 50% of salary, since it's a metro city, 50% of salary. Okay, so whichever is less is exempt, whichever is less is exempt. Minimum of these three things is exempt, that is 1,80,000. So the taxable part is 360 minus 180, 1,80,000. Whichever is less is exempt. Okay, 1,80,000. Okay, I know at the corner of your mind these things will be there. Time to recollect. Or what you recollect panna, okay, I promised you I will not ask you any question. I just want to give you confidence. It will be there at the corner of your mind that somewhere a HRA exemption. Okay, if this plus revision la chuma or what you 1 or 2 questions work pannona, you will get it. Okay, I don't think in exam they are going to look at HRA exemption and all. They are going to give the amount, but to be one question, 1 or 2 questions working out. Okay, conveyance allowance wholly exempt since it's official. In both the cases, it is wholly exempt. In both the cases, it is wholly exempt. Okay, it is okay. Even in the case of optional tax regime, all official allowances, including transport allowance for a handicapped employee, other விஷயம்ல work பண்ணலாம். Okay, right. Employer and employee contributes. Okay, employer's contribution to pension fund. Okay, always add it as part of salary. Later we will provide deduction. Employer's contribution 12 lakh into 12%. He is contributing 12 lakh into 12%, 1 lakh 44,000. Always add it to, okay, add it to your salary component. Employee's contribution will be part of this. You need not work out, but employer's contribution, add it and then deduct 10%. Then deduct 10%. Okay, employer's contribution to pension fund. Okay, gross salary. Standard deduction under section 16. Okay, in this case I will get minus 50,000, whereas here I cannot claim standard deduction. Okay, taxable salary, okay, is 14 lakh 74,000 under the normal tax regime, 17 lakh 4,000 under optional tax regime. Okay, right. Capital gains. Okay, LTCG taxable under 1112A. Okay, about 1,40,000. While doing the tax, I will do that 1 lakh. Okay, gross total income. Gross total income. Okay, 1614 and 1844. Here again, I need your attention. Here again, I need your attention for understanding deduction. Deduction under section 80C. 80CCD subsection 1. Employee's contribution. Okay, let me be very clear here. It is employee's contribution to pension fund. Employee's contribution to pension fund. Okay, so employee is also contributing basic salary into 12%, but allowed is only 10%. Okay, I'll also write it as this: restricted to 10%. Restricted to 10%, 1,10,000, 1,20,000. Up to 150 you can claim. This falls under the part 1 up to 150. So no problem, claim this 1,20,000. Whereas here you cannot claim part 1. Here you cannot claim part 1. Whereas 80CCD subsection 2. 80CCD subsection 2. Okay, right? Employer's contribution to pension fund, again restricted to 10%. Employer's contribution to pension fund, again restricted to 10%. Again the same 1,20,000. Interestingly, that can be claimed here also. That can be claimed here also. Please understand, in optional tax regime, I cannot claim normal ATC and the 150 varaiko. That I cannot claim. Additional contribution to National Pension Fund and the 50,000 I cannot claim. Whereas the third part, 80 CCD subsection 2, employer's contribution to pension fund. I can claim under optional tax regime also because I included it as income. I can claim the expenditure also. So my total income computation of tax. Computation of tax. Income taxable at normal rates. Income taxable at normal rates 1374 minus and the 140 இது LTCG. Similarly, income taxable at optional rates, okay, 1724 minus 140. LTCG taxable at 10%, okay, after providing 1 lakh relief, okay, is 40,000. 140 minus first 1 lakh not taxable, remaining 40,000. So Inga tax, okay, I don't think any senior citizen and all is given. Inga tax will be okay, 12 lakh 34,000 minus 10 lakhs into 30% plus 1,12,500. Okay, repeating 12 lakh 30, 2 lakh 34,000 into 30% plus 112,500. Whereas here it will be okay 15 lakh 84,000 minus 15 lakhs into 30% plus 187,500. Okay, right? Here it will be 10% in both the cases. Okay. Total base tax and HEC at the rate of 4%. So you know what conclusion to write. last question, and obviously it is Talevar's name. Okay. Talevar has a taxable income of 11 lakhs, make it as 11 lakhs. After claiming gratuity exemption of 10 lakhs, commuted pension exemption of 140, leave encashment of 75,000. Compute tax under both regime. The beauty is these exemptions can be claimed even in optional tax regime. Optional tax regime la enna exemptions claim panna mudiyadhu? 10(5) leave encashment, 10(13)(a) HRA, 10(14) children education allowance, hostel allowance, underground allowance, hill area allowance. Nowhere 10(10) இது எல்லாமே 10(10). Section 10 subsection 10 is gratuity. Section 10 subsection 10A is commuted pension. Section 10 subsection 10 AA is leave encashment. இது எல்லாமே you can continue to claim even in optional tax regime. Even in optional tax regime, this can be continued to claim. Okay. So question number 10, I'm starting little theoretically. Okay, I'm starting the question theoretically. Exemption on terminal benefits. Terminal means at the time of leaving employment. Okay, like gratuity, commuted pension, and leave encashment can be claimed both under normal tax regime and under optional tax regime. It can be claimed under, okay? So there is no addition that needs to be made. There is no addition that needs to be made, my dear friends. There is no addition as such that needs to be made. It can be claimed under both methods. Terminal benefits, okay, can be claimed under both the things. Okay, right? So total income will not undergo any change. Total income will not undergo any change. So total income after claiming the above exemptions, okay, total income after claiming the above exemption, make it as 11 lakhs, please. Okay, 11 lakhs. Base tax, my dear friends, base tax will be, okay, 11 lakhs minus 1 lakh, okay, into 30% plus, okay, my intention is to give it as a senior citizen, the question, but நான் டைப் படிக்கும்போது விட்டுட்டேன். Kindly take it down as, okay, தலைவருக்கு வயசாகாது அதனால்தான், okay, but kindly take it as senior citizens, so that's why I say material கடைசியா printed பண்ணேன்னு. Okay, kindly take it as senior citizen because my intention was that to tell you optional tax regimeல அந்த benefit இருக்காது அப்படின்றது. Okay, so kindly take it as senior citizen. So okay, 1,10,000. Okay, so up to 3 lakhs, so remaining 2 lakhs into 5%. So right, okay, I will here also highlight it, suppose you have missed it also. Okay, okay, inga will be, I'll directly make an addition, 2,50,000 into 5%, okay, plus next 2,50,000 into 10%, plus next 2,50,000 into 15%, plus 1 lakh into 20%. Repeat பண்றேன். First 250 not taxable. Next 250 க்கு 5%. Third 250 க்கு 10%. Fourth 250 up to 10 lakhs வந்துருவோம். Okay, 15%. அதுக்கப்புறம் 1 lakh into 20%. Okay. 4,26,400 and 98,800. So optional tax regime. நான் எப்பயுமே திருப்பி சொல்றேன், the senior citizen மாத்திரம் this might be beneficial. That is for your practical work. Okay, so optional tax regime, you will understand that that is more lesser tax only in terms of tax planning and not anything else. Friends, we take a 10-minute break or maximum 15 minutes break. In my clock, it is 8:23. We meet back around 8:40 maximum, 8:38 or 8:40. Okay, we meet back at 8:40, and when we are going to meet back, we are going to do salaries, okay, PGBP, and if possible capital gains, so that our evening will be more towards TDS and other things. Meet you in just 15 minutes and closing this session. Okay, next session will be a separate record.